Over the past couple of weeks, Trump's tariff news has sent stocks crashing down and short squeezing right back up. However, with the latest tariff news I'm going to share with you guys in today's video, what is that going to mean for a couple key stocks out there? Also want to bring to you guys attention, there are several trading patterns setting up, and we'll see, will they hit targets this week? Last week was one for the books, no doubt about it, especially last Wednesday when we had that massive spike on the way back up. Once Trump said they're going to go ahead and give a 90-day pause on tariffs. However, when we look at the price action on Friday, we look at some of the stocks like Apple, we got to ask yourself a question. Did somebody know something ahead of time? And Apple right now looks like it could be setting up a potential A to B equals C to D pattern on the way up. The B to C leg is a corrective leg, and the D leg projects a price point of 214.94. However, it's not quite high enough to fill the gap. So why could Apple be going up as much as it did on Friday? Could it be because of this? Trump spares smartphone, computers, and other electronics from China's massive tariffs. Keep in mind, the U.S. has a 145% tariff on China at this moment. And we can see with that news, not only is Apple a big winner out there, but also Nvidia scores a major win with the tariff exemptions. Now, if we come over real quick, we take a look at a chart of Nvidia looking very strong, much closer towards the high of that candle on Wednesday, where the stock market just absolutely went squeezing on the way up once the current administration has already started to capitulate. Now, here's something else the current administration did not take into account, and that was the collapse of the dollar shows the biggest damage right now is to the US brand. And I don't believe the current administration thought the dollar would go down as much as it has. Look at the drop we've seen in the dollar. At the beginning of the year, the dollar was as high as 110.19. Then all the way down here towards this low on Friday, the dollar made it all the way down to 99.07. So what's going to happen if the dollar loses its reserve currency status? Then we can also see right here, right now during tax season, Americans are spending their tax refunds differently this year. And it says a lot about this economic moment. Now, I don't know what you guys do for work out there, but I know in the field I used to work at, around tax time was some of our busiest times out there. And now what this is going on to say is that a lot of people that are getting their tax returns, and the average refund right now is about $3,100, they're using it for necessities, paying off loans, paying off debts, and just trying to go ahead and give themselves a little bit of breathing room for what could be up ahead. Now, with the dollar going down, you would think this would actually be good out here for the stock market. But then we come over and take a look at gold. Notice gold this week was making another new all-time high. Can't stop, won't stop. Gold just keeps plowing on higher. Gold completed two of our targets, and the lowest target we had was right down here at 2,974-ish. Hit that target and has now started to continue to make new all-time highs. However, at a time when gold is also going up, come over and look at the 10-year yield on the move once again as well. So at a time when the government needs to refinance its debt, we see the yields going up once again, and this is not good out here. The fact that yields are going up while the stock market is also crashing lower, that is essentially a recipe for disaster. JP Morgan says to the Fed, there is a liquidity crisis right now. Basically, hey, we need help. Come bail out Orange Man and help save the stock market before this turns into 2008 all over again, or maybe even something worse. Now, when we come over and look at the Fear and Greed Index, right now we're sitting at 13, and the Fear and Greed Index has been depressed all year long. When we look, we can see the Fear and Greed Index by this chart has made it as low as 3. I cannot remember a time in recent history where I've seen the Fear and Greed Index so low. Then we come over and look at the most recent investor sentiment survey. Once again, the bullish sentiment is starting to improve. We come in at 28.5, but then we look at the neutral category, it's only 12.5, which is horrendous. And the bears are still out there in full force at 58.9. And it's really not surprising to see the investor sentiment survey and the Fear and Greed Index as high as it is. We've seen the VIX make a high up here around 60. Now on Friday, we did see the VIX starting to come down, but still, even with Friday's close, we can see the VIX is still well into the 30s. We really need to start seeing the VIX below the mid 20s and preferably the lower 20s if we want to be able to see a sustained rally out here in the stock market. I want to make you guys aware right now, Take Profit Traders having a 30% sale off all their valuation accounts, and best yet, once you pass the evaluation, there is no activation fee. If you want to take advantage of this offer, use the link in the description box down below. Use code epitome at checkout. So with the recent sell-off in the market, if we measure right up here from the swing high down here to the swing low, we can see the S&P 500 has dropped 21%. If we look at the small caps real quick, the Russell 2000 from the 52-week high all the way down to the lowest point, we can see that has dropped almost 30%. If we look at this stat brought to us by Wayne, when the rolling quarter loss is 15% or greater, let's take a look at how we look 4 weeks, 13 weeks, 26 weeks, 52 weeks, and 104 weeks later. If we look right down there on the bottom, we can actually see that 4 weeks later, out of the last 21 times this has occurred, we have been up 14 times, only down 6. If you look 13 weeks out, we have been up 15 times, only down 5, and the same thing for 26 weeks out. Then we start looking at a year later, we have been up 16 of those times, down 4, and then 104 weeks later, we have been up 17 times and only down 3. So is this nothing more than just short-term volatility in the market? And we're about to go ahead and continue to new all-time highs. And I'm going to warn you guys, be very, very careful. I do not think the selling is done yet. I still think there could be more to the bounce to the upside. We have not seen the finale yet. Now we come over and look at the sector performance. Look on Friday, every single sector was in the green. Basic materials by far outpacing everything else. But then as we look at the 1 week performance, we can see technology by far outpacing everything else, up 8.87%. And if we come over real quick and we take a look at, let's say, SMH. SMH has had a nice little push on the way back up, but for all intents and purposes, we're looking at a double inside day, which basically means get ready. We're likely going to have a breakout or breakdown from this pattern. And I do want to remind you guys, on Friday, we do have a holiday. It's going to be Good Friday. The markets are going to be closed. And around holidays, the markets tend to be a little bit more bullish than they do bearish. Now, if we come over and look at the XLK real quick, XLK was actually able to break out the high from Thursday, which Thursday was an inside day. Are we going to see XLK start to work up towards this next high volume area right up in this distribution area of the profile? That's going to be anywhere from about 218 all the way down here to about 212.61. We can see on the daily chart, the MACD indicator trying to cross to the upside. Then as we come over, look at the 10-year versus the 2-year yield, notice we've seen the steepening of the yield curve once again. And again, this is normally when we see problems out here in the stock market. Then we look at the Dow Jones versus the transportation index. Transportation index being on the bottom, which basically called out the divergence right up here when the Dow had that double top pattern, and we've seen the Dow come crashing down. However, the transports was giving us a heads up that watch out, we are about to go lower. Even though the Dow had quite the recovery out here this week, look at the transports. The transports basically not really recovering at this moment. Then as we come over, look at the SPY versus high yield bonds. Notice the SPY, right? SPY trying to go up. High yield bonds not nearly participate on the move up like we're starting to see with the SPY. Now, could that change this week? That's something we most certainly are going to want to pay attention to. Now, when we come over and look at the SPY real quick, notice out here, I want to start off looking at the weekly chart. What do we got going on from the weekly standpoint? You can see last week we did probe a little bit lower, but we closed in the upper third of the range. We do have a wick on top of that candle, but for all intents and purposes, quite a wide range. MACD indicator on the weekly chart not showing signs just yet of firming up, but then we start looking at the daily chart. MACD indicator trying to make it across to the upside, but now I'm asking myself, are we going to start to come back down? Is this going to end up being just a big slot fest consolidation, back and forth, and basically being contained within Wednesday's massive candle we had out here? Then as we come over, look at the 4-hour chart, MACD indicator does have a bullish cross to the upside. Then we're starting to look at this gap that we have up here that has not been filled yet. That's going to be up here about 564.72. If we can start breaking above this swing point, which the swing point comes in at 546.34, then let's see if we have the potential for that ABC pattern to complete. If we grab our Fibonacci extension tool, we measure the A to B leg, the B to C leg is the corrective leg, and we project right up here for D. That would bring us all the way up here to fill the gap. However, with this pattern, I want to warn you guys, one, it's not validated until we take out the swing high right over here. And two, if we start coming back down below this swing low at a price point of 509.32, then we'd have to redraw that ABC pattern out to the upside. On the 30-minute chart, you can see on Friday, we started grinding on up. And I was hoping we were going to make it all the way up here, filling the gap. And that's something we were talking about on the live stream. Now, if you guys don't want to miss that next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. We have more Take Profit Trader accounts to give away this week. So if you want a chance to win those accounts, then make sure you join us on the live streams. So as I look at the profile shape on Friday, we were able to take out the high from Thursday, kind of forming a P as in Paul shaped profile. Now, with this profile shape, it doesn't necessarily mean bullish or bearish. What it does signify is that most likely a lot of this move was nothing more than short covering rally. Then as we come over and start looking at the futures markets, notice we have this potential on that 4-hour chart for an ABC pattern on the way up. If we grab our Fibonacci extension tool, we measure A to B, B to C being the corrective leg. Notice how high up that projection is. 5801. That brings us one, taking out the first untested point of control. And then we have a second untested point of control slightly above that area, about 5815. Now, even though we have those price targets up there and we could be working on that ABC pattern on the way up, it does not guarantee we're going to hit that target out here this week. And actually that pattern would not be validated unless we can break above the swing point right up here. Now, to play devil's advocate, could this potentially also be an ABC pattern on the way down? And that would go something like this: the A to B leg, the B to C leg being the corrective leg, and that would give us a price completion right down near value area low from last week at 5,031.49. So the key to see which pattern is going to be validated, we need to wait and see which swing point is taken out, the lower swing point or the upper swing point. If we do jump on this pattern early, just note you're going to be early. It could end up not validating that particular pattern. Now, if we go ahead and look at where the volume profile levels are, value area low will come in at 5,033.75. The point of control is going to be up here about 53.95 and a quarter, with value area high being up here at 54.26.75. Now, if you're feeling froggy and you really want to short this market, wait and see, can we push above value area high and then come back down? Because then we got a quick target at the point of control. Anything below that, I want to target this next high volume node at about 52.97 and 3/4. Then see if I can play a runner all the way down here towards value area low. Then as we come over and look at the 30-minute chart with the daily profiles, notice we had this minus development area we talked about last week. We got into it, the market rejected back out. That's what we would expect to see the first time we come into that area. However, if we do start to sell off this week and we get back into this minus development area, let's not forget, we do have an untested point of control at 5,032.00, which is very close towards that weekly value area low. Now, when we look at the daily profile levels from Friday, value area high is going to be 5407.50. The point of control is going to be right below it at 5395.00, with value area low being about 5304.00. Now, if you're looking to fade this move lower, we might want to wait and see, all right, can we get a gap up maybe Sunday night with the hype of that news that should benefit Apple and Nvidia, meaning the China tariffs for electronics like smartphones and laptops and such won't be in that 145% tariff. And then we start coming back down below value area high. Keep in mind, we do have this kind of minus development area within the profile over here from Thursday, and that ranges anywhere from 54.43 down here to about 54.26. I was actually thinking on Friday we're going to make that level. However, the market simply ran out of steam before we got up there. However, it may not be over with just yet, because keep in mind, we want to think about the bigger picture out here. Now, we talked about the ABC pattern on the 4-hour chart, but what about this gap that we have right up here as well? Now, that gap to be filled on the futures markets needs to come up to about 5586.25. So if we start breaching this high right here and you're looking for a quicker target, the gap fill would be a target I want to focus on before turning my attention towards the untested point of controls and that ABC target to the upside. Now, if the market didn't have enough to worry about with tariffs and all that fun stuff, let's remember, we are now starting off earnings seasons. On Friday, we had JP Morgan, Wells Fargo, and a few other companies report earnings. But this week, we have some big expected movers out there. Look at Thursday. We have Taiwan Semiconductor. We have Netflix. On Tuesday, we get Citigroup, PNC, we get United Airlines, and on Monday, we get Goldman Sachs. Now, when we look at the big expected movers out there, look at Monday. Goldman Sachs expected to move plus or minus 10%. We look at United Airlines on Tuesday. The expected move is plus or minus 14%. On Thursday, we have Taiwan Semiconductor and Netflix expected to move plus or minus 12%. So again, we're going to have another week filled with plenty of opportunities for us in the stock market. Now, if we come over and look at the QQQs on the weekly chart, look at how large the range was this week. The last 2 weeks, the ranges have been absolutely crazy. That double top target we had up here at the highs, we hit over double the price projection out there. And notice right where we came down to, if you measure our Fibonacci retracement from October 2023 up here towards all-time highs, we came down, we got a little bit below the 61.8, and then the market started to come back up. On the weekly chart, the MACD indicator is not crossed to the upside just yet. And now we also want to pull for another Fibonacci retracement. I'm going to go ahead and go from all-time highs all the way down to the recent low from this week. Notice we almost made it up towards the 50% level. Then the market got smacked back here just a bit. On the daily chart, the MACD indicator trying to cross on the way back up. And notice we were able to fill 2 of those gaps down in one single candle that massive day we had on Wednesday. Now we still have that anchor VWAP up here from all-time highs, which we're still below, but we could be setting up a potential A to B equals C to D pattern, which is a little bit easier to see out here on the 4-hour chart. On the 4-hour chart, the MACD indicator is also crossed to the upside, but if we grab our Fibonacci extension tool and we measure from the swing low right here and just drag that all the way up here to the swing high, and then we pull it right back down here towards that swing low, we can see that ABC pattern price projection is all the way up here at about 490.70. And again, that would get us back above this high volume area. Now, if we do start to break this swing point right up in here, I would want to see, can the market make another run, maybe up here towards about 476.23, and basically go ahead and fill that gap and then work our way up towards this next high volume area at about 478.73. As we jump over and start looking at the 30-minute chart, MACD indicator kind of flatlined out here. And I was hoping on Friday that we're going to come all the way up here and fill the gap. However, since we didn't fill that gap, could that be a potential target for us coming this week? And if we trade the futures markets, are we going to get some fireworks come Sunday night? Speaking of the futures markets, as we jump over and start looking at the 4-hour chart, we can see we had a massive range out here last week, 2,926 points of range. That is absolutely insane. The prior week I thought was large at 26.56, and we were able to take out some of the price projections from the prior week. One of them being this whole minus development area, and the second one was basically making a run back up towards that untested value area low at 18,682.75. We just barely missed hitting last week's point of control at 19,401.75. Now you can see this week we are closing above value area high, and that value area high comes in at 18,457.00. We do have the point of control from this week at 17,250.5, and then value area low will come in at 16,594.00. Other than a volume profile rotation to the downside, there's also a critical level that I'm watching, kind of this minus development area. I'm just going to draw a simple horizontal line right through that area. That price point is going to be right down here about 17,880. Now we have the potential for either an ABC pattern up, or we could be working on an ABC pattern down, or maybe even a double top type of pattern. Now let's go ahead and map out both different. Let's go ahead and map out all these different scenarios. If indeed this is going to be an ABC pattern on the way up, that price projection will be up here about 20,562. Now, in order for that pattern to be validated, we must take out the swing high right up in here. If we fail to take out that swing high, meaning we produce a lower high, then I'm going to start looking and saying, okay, could this be a potential A to B equals C to D pattern on the way down? Now, if the high holds from Friday, that would give us a price completion about 17,398. However, if we do go higher, we would have to adjust this Fibonacci extension tool up a little bit higher. So I want to wait and see, do we start to get a turn or not before I basically start trying to put any weight on those lower price projections to the downside. Now, as we come over and look at the 30-minute chart with the daily profiles, notice that large minus development area we have from last Wednesday. Now, we were able to get into it on Thursday, and even on Friday, we double dipped into it a bit. If we start coming back into that level again, watch out. We're probably going to go ahead and flush the remaining of that zone and maybe make it down here towards that point of control at 17,420. But as we're dealing with the volume profile levels from Friday, notice value area high is slightly above us at about 18,853.00. The point of control is also above us, 18,815.75, and value area low is right down here, about 18,481.5. So was this move up on Friday all having to do because somebody already knew smartphones, laptops, and electronics were going to be excluded from that China tariff? And if so, now that the news is out, is that going to be a case of nothing more than buy the rumor and sell the news? And something I forgot to talk about on this 4-hour chart. Since we're closing above value area high, what does that set up for us? That either this week or next week, highly probable we're going to make it all the way back down towards value area high to come back down and retest that level. Then if we break that, I want to target that minus development area, point of control, and possibly value area low. Now, if we look at the economic news that we had on Friday, look at the consumer sentiment and inflation expectations. Horrible out there. Consumer sentiment, 50.8. Inflation expectations, 6.7%. And if we look at the economic calendar for this week, what is on deck? On Monday, we have a slew of FOMC members speaking. On Tuesday, we get the Empire State Manufacturing Index, along with more FOMC members speaking. On Wednesday, we have the core retail sales numbers coming out, along with Papa Powell coming to go ahead and challenge Mr. Donald Trump to see who can move the markets more. Is it going to be Jay Powell at 130, or is it going to be the Don himself? Then we come over and look at Thursday. We have the ECB as their monetary policy statement. And again, why this is going to be important, since the euro is the highest weighting of the dollar index, if the euro has outsized moves, that can have implications for the dollar index. And when the dollar moves, a lot of times we're going to see our markets move as well. We also have the weekly unemployment claims in the Philly Fed Manufacturing Index. And then we look at Friday is nothing more than a holiday, and there'll be no trading on Friday. Now, if you guys would like to learn about the static drawdown and take profit trader, then make sure to watch this next video right here.